Hi traders, hope you're all doing well. It's Friday, November 2nd, and we are at the second day trading for November. So we are looking right here, the S&P 500 for daily time frame in the last 2 years. As we all can see, I'm still using the same thing in a very simplified pivot. 20 days moving average, 50 days moving average, and 200. I keep it simple all the time so we can easily see the picture where the stocks is going, the stock price. So as we can see, in the last 2 years we are here, truly an uptrend here. And this big drop was 2018 on the January and March period, and the 2017 was a quiet period for the stock. So now we had a higher high, and now here for one year. Now let's stretch it out, zooming in for 1 year performance. So here is the S&P. As we all know, in the October we suffered a big crash, and we almost lost 10% for the intraday low for that, from peak of 293 to the low of 260, and then we closed about around estimate minus 7% for October. And then here we kind of grinded on here. Now the key question now is, are we out of the woods yet? Is the selling over? As for me, I wouldn't say we're out of the woods yet, and I am not comfortable with the market compared to Q1. Why? The difference is that this one in the March, as you can see, we sold out from 288 and found support somewhere in here, 255s, and then on the next tranche of sell-off, we tested the low. However, we had printed a higher low for this session, for this pullback. And as you can see right here, this is kind of like the first low, the second low. It's still, for me, it's a lower low support, and right on this area, as we all know, the market hits extreme oversold on this, especially the biotech and the emerging markets, and mostly everything is hit oversold, and then kind of like 3 days rally, and today the fourth attempt for the market to rally, and you can see we hit intraday resistance right near 200 days average, 200 days moving average. So, and also there's a lot of underlying going on, like the ongoing trade dispute between US and China, and the midterms next week. As for me, I will wait for the midterms to finish and see where SPY settles. And if I am trading SPY, I will be neutral above 266. And if we go below 266, then you gotta hit short and sell everything at that point, if you are a short-term trader. So above 266 is neutral, and if ever S&P gets back above 276, then maybe we can test 285 at that point. But for now, let the midterm settles in and see where it goes. So far, all I'm seeing is a textbook relief bounce after hitting oversold for the entire market, and then here pulling back on the first resistance. Also for today, the Apple reported earnings last night, and the earnings reaction is down 7%. So that's another thing. That's why S&P is pulling back today. Thank you for watching my video, and feel free to subscribe on my channel.